Welcome to this half-year report presentation from Nordic Unmanned. I'm here in Sandnes in our head office, and today we have a combined digital and physical presentation. So I guess this will be okay. So I'll start with a bit on our strategy update and where we are as a company today, where we come from. So since we started the company back in 2014, we are today in 7 offices, and we have operations in 20 countries. And we do deliver industry-leading drone services, products, and data analysis. And our market is rapidly evolving, and we are in many ways a first mover in this market. We are flying what we have talked about before, and what is the most interesting part of our industry as far as we see it. It's the beyond visual line of sight flights, and I would say, yeah, 99% of our operations it's driven around that. We have 34 different unmanned aircrafts that we are operating with a fleet value of around 20 million euros. We have, during these years, we have collected unique air pollution emission data for more than 1,500 vessels, mainly large commercial vessels sailing different parts of Europe. We have safeguarded more than 1,000 migrants, basically following them to see if they need support, and detecting them to report in if they need any support. This has become, over the years, and especially this year, a bigger and bigger part of our operation. We've done 5 acquisitions and 2 joint ventures. The latest joint venture we published yesterday for Brazil. And we are holding probably the world's most comprehensive operational license. We see the European market maturing for the regulatory point of view, but the rest of the world is not yet where Europe is, so nobody else is operating in this way. We have won contracts more than 85 million since we started the company. And when we look at our peers, so other listed pure play drone companies, we are the youngest of the top 5. We are the 2nd biggest in Europe in terms of revenue, 5th biggest globally in terms of revenue. And if we look at it from a drone as a service perspective, we are the 2nd largest globally. So that gives us a bit of background of where we are. So going forward, we see a need of focusing on our mature market segments, where we see firm outlook and profitable growth. So we have been adjusting a bit on where we are finding the growth that we are after. So security and defense remains an important, very important part of our business, where governments and large enterprises with need for security solutions are the core customers that we are after. On the offshore energy side, we see a big shift. So our logistical approach and logistical drone has been driven by our projects with Equinor, and this project is becoming more mature, so is the technology. And this is also creating a lot of opportunities for us in a market where we can clearly see the business case of replacing vessels, replacing helicopters with drone. It's a cost saving, it's more efficient, and it also represents a much less CO2 footprint. So we're going to continue to go in that direction, but from a logistical point of view, that's where we see the biggest opportunity right now. On the maritime side, governments, vessel owners, and port authorities will continue to be core markets, but we are moving into the data as a service side on top of the operations we've done so far. And on the rail side, we're going to continue to focus on rail with our developed products, but we are not going to continue to focus on infrastructure in general. Infrastructure has not given us the revenue that we were expecting, and we see a lot more competition in that segment. So that's why we are focusing on rail solely and not the rest of infrastructure. And if we look into how we have reshaped the organizational structure for this, up until now we have had Nordic Unmanned as our top operational company, and then we talked about verticals. But from now on, we have organized the business into fully functional business units. And we're doing that to give a lot more focus to these areas, a lot more responsibility for their profitability, and also because they are developing in different strategic directions, and that gives us new strategic opportunities by organizing it in this way. So Norrøn will be our pure play drone airline. So it will do drone as a service, where it today has a state-of-the-art fleet of drones. It has pilots and technicians. It has the operational control center, and is conducting complex missions today. And the permit to fly is within here. So they will have a pure focus on the large operations with larger drones. That means we will leave small drone operations or operations that we don't see scalable to others if those come along, and we'll solely focus on this area. For what we now call NUMAR, we'll have our pure focus on data as a service for the maritime industry. So we have been asked several times what our data strategy is and what sort of data products that we're after. And we see now the maturity where we're at, the access to data that we have, and the type of customers we have, that it's time to go for a full data as a service strategy. So the core of this will be emission monitoring and using our subsidiaries today that do collect this type of data. And it's the maritime market where we see our market, as we have a lot of exposure to the market, and we know the needs and the regulation in the market well. So building our data platform and data analytics for the current data is a core priority as we move forward. Then on the new tech side, we don't want to do R&D. We want to be very clear on that. On the new tech side, we're collecting all our existing products and all our IP, and we want to be our OEM, so original equipment manufacturer. So that means that the existing products in our portfolio, the Stalker product family, the AirRobot product family, and the Drone Matrix product family will all be collected in this business unit. And then finally, on the NU Global, so on the distribution side, we see a need of quicker coming to the end users, expanding our accessible market, and doing so not only by going on our own, but together with existing distributors. So over the last couple of months, we have built a distribution network that now consists out of access to the Australian market, the US market, the Canadian market, and with the announcement we did yesterday, with the establishment of a joint venture in Brazil, it also gives us access to the South American market through existing partners in this market. So we will use the sales and distribution network for our products and services, and we will also use our offices throughout Europe where needed to give us access to the market. Okay, so if we then go into the Q2 highlights, so for Q2 we have collected the highlights in these 8 boxes. So our CRM pipeline is stable. It's 1.1 billion euros. We did get a big award from the German Armed Forces in Q2 for 12 million euros. For delivery of 145 AirRobot 100H drone systems. We have an increasement in the backlog of 13%, If we look at the revenue side, we have a 57% increase in revenue for the quarter, ending at 4.8 million euros. And in the first half, we have an 84% increase in revenue, ending at 7.3 million euros. And the gross profit for Q2 was 4.1 million euros. If you look at the highlights for the group, we have already in mid-August exceeded full year 21 revenues. As you can see on the rolling quarters, the Q2 is another all-time high quarter. But we see profitability negatively affected by delays in startup of operations and other temporary impacts that we have from our operation. We did a private placement and a subsequent offering back in June for 96 million NOK. And we also, throughout this strategic process that we're in, we have seen that we need to postpone the uplisting most likely into 2023, as we want to have fully implemented the legal entity and operational model that we are now showing you. If we go into the commercial side, so our revenue is highly driven by flight hours and driven by the activity in our airline Nordic. And the revenue for this quarter ended at 3.2 million euros with a negative EBITDA of 1 million euro. And this business unit is the business unit that has the highest proportion of our total balance sheet, with an investment of around 20 million euros. In the quarter, we did do 814 flights, and the increase corresponds with the revenue increase. And in the first half year, we passed 1,000 flight hours. And if we look at to give a understanding of how much this is, we introduced how many kilometers this actually is. So just in Q2 we flew more than 50,000 kilometers, which represents 1.5 times around the globe. So there's a lot of activity, and for the first time in Q2 we had 4 simultaneous large operations, which was another milestone for us. Shows the scalability in what we are doing. But even though we are seeing a slower start of the operation, so the complexity of starting the operation, we continue to underestimate due to external factors like governments and authorities and other elements that are all playing part of this puzzle to start the operation. And we see our new fixed wing operation that we started in the Q2. We hadn't flown fixed wing before, and we knew it's going to be challenging, but we see it had a more negative profit effect than what we expected. So if you look at the fleet planning for our camcopters, as some of you know, we have 5 different air vehicles, and we use them in different setups, but we have 3 different systems. So our main operations for time being is deployments for our biggest customer, the European Maritime Safety Agency, where the operation in France and the operation in Spain is what is the ongoing operation for time being now. We also have added Brazil here. So as we informed about in the notice to the market yesterday, with the forming of the joint venture with Omni Helicopters International, we are moving one of our camcopter systems from Europe to Brazil, to be in the Brazilian market in a period, and then we will evaluate the market based on that. So Omni Helicopters International, they are the largest helicopter operator in Brazil, and they have a demand that we are planning to fulfill with this initial move. So on the Aerosonde side, we are currently flying in Estonia. So we are in a Baltic or East Baltic deployment. So we started in Q2 in Finland, where we were flying for the Finnish authorities. Then we have now moved into Estonia, where we are flying for the Estonian authorities. And we also having double crews, so we are flying 24/7 operations in Estonia, and we're also flying 24/7 operations in Spain. So we are very busy on these operations as of now, but we still have capacity on the Aerosonde later in this year that we hope to utilize both on the existing contract and on potential new contracts. So our serviceability is driving both our profitability, but also our revenue. So ideally, we want to be serviceable at any time, and when we are not serviceable, it has a negative profit effect, and it has a revenue effect that basically postpones our framework into the future or into the next quarter. So if you look at, we get a lot of questions of when can drones fly? Can you fly anytime, and so on. So this is the flight statistics where you can see that the challenge with the camcopter operation is technical. We still have some technical issues that we are working with. But with the Aerosonde, with the Q2 flight, there has been weather issues, and basically when we started the operation, we didn't plan for moving the takeoff direction in 360 degrees. So we have learned now the flexibility of having a non-runway based fixed wing, basically meaning that we can change the takeoff direction. So we expect the weather cancellation to be significantly reduced when we go forward. Okay, so on the Newmar side, this is, as I said, our entering into a very clear data as a service direction. Coxie have up until now collected a lot of unique data of emission profiles of marine engines and different types of vessels and drilling rigs. And these data, we have not looked at it as what the potential that lies in the data, and we have not looked at what the potential that lies in expanding our business to our data as a service business model. So that's all going to happen in Newmar, where maritime mission data and analytics is going to be the core of this area. Basically scaling on the existing business we have and the existing investments of 4 million euros that we've done in this area. So it's a very interesting move, because we have this area is actually an area where we see a lot of regulatory changes for the future, where green is going to be very important for the maritime industry, and the emission level is going to affect both the cost of running the vessels, but also the cost of going to port and other fees that you will have to pay for being a high pollutant vessel. So we have activity here in Europe, but we also did our first operation on a container vessel outside of California in last month. And we are bidding on contracts both in South America and in Australia for time being with this within this area. So in a new tech, the Bundeswehr contract was a big breakthrough commercially for us for several reasons. So first of all, the AR100H, this is the first big customer for that system. Has been developed for more than 3 years, and the Bundeswehr is a customer that we definitely want to have. They have the largest defense budget in Europe, and their budget is now 100 billion euros. So the customers' needs for the future, we believe, will be focused towards drones, and we are glad to be awarded this competitive contract. The revenue from the area was 0.3 million euros. With a gross profit of 0.2. We expect this revenue to considerably increase. Contract will come into Q3 and First deliveries in the of physical equipment in the contract will be in Q1 2023, and we have spent quite a lot of time in the Q2 quarter to secure components for the Bundeswehr contract. So getting components is a big challenge for time being, and with this contract being a firm price contract, we need to have all the components in stock to make sure that we have no risk attached to that. Development of the Stalker logistic drone has been, there's been a lot of development. We did go offshore with that August. So ahead of that, it has been qualified and got ready for the offshore deployment at the Gullfaks field. And the Stalker railway drone has reached this milestone, and commercially we expected operations in next month for a customer. We did purchase or acquire 55% in Drone Matrix in June, and that integration has been more or less completed into the NU Tech business unit. On the NU Global side, so again, this is a collection of our commercial arm controlling our sales and distribution. We see a big increase of up to 0.9 million euros in revenue, and that is due to what we call the sudden change in demand within this business unit, and we see it's both a short-term change in demand and it's a longer-term change in demand, both because the lack of historic investment in drones. So many of the customers are realizing they have to think differently, they need to invest. But then also the change in strategic thinking on the way you use drones, and also the backing funding that follows this. So we did sell a surveillance drone to a donating European country in the quarter, and we did train drone operators from the Ukrainian armed forces in the quarter. And we have, as we also have communicated before, we have several large offers that are awaiting funding or priority. So that means that the need is there, but short term, it's a commercial process that's very different from what we have done historically. So the openness and tendering, it's not there. It's more offers, and there's not time enough to do everything. So it's all about what you prioritize the most. But as we are pointing out, the conclusion of these opportunities could have a substantial effect on our Q3 and Q4 numbers, as we have secured stock levels, both 1.7 million euros in inventory as of end of the quarter, but with our partners, they have also stock that is ready to go now, and that's what it's all about. So any contracts here will be delivered very quickly, and that's why it's going to affect our potentially going to affect our revenues. And we have started the establishment of our global distribution network. We have also announced the opening of our US office. We do not believe that we can succeed in the US without having a local footprint, and we have hired a seasoned officer in Tim that's going to be running the US market, that knows both the drone market in the US, but also knows the type of customers that we are targeting in that market. So he will be taking over the US leads that we have, and we have good hopes that this will lead to revenue already within the next 6 months. So, and it's going to be a lean startup, meaning we will use our existing resources here, scaling our flight permit from Europe into the US, our products that we do have here into the US, and the connections and resources that we have here will be used in the early phase of this company's life. On the backlog side, we have a backlog of 67 million euros with an increase of 13%. The increase is mainly due to the Mikado contract and a couple of other smaller contracts. And as you can see, for the second half, we have a backlog of just above 10 million euros, and our backlog is now stretching into 2026. When we look at the potential awards in the near future, we have been giving quite specific information before on our quarterly presentations of waiting for, and we are trying to bridge those expectations and not inform too much. But what we see is that we are still waiting for awards connected to urgent request for tactical UAVs. We are still waiting for awards for more offshore energy logistical concepts. And our biggest customer published a tender this summer that we have answered to, which is called the OP5 tender, which is a 20.5 million euro service contract that we have been bidding on, and will know hopefully by the end of Q3 the outcome of. There are other triggers as well that are significant, which we group in maritime border monitoring and Heimdall Indigo payloads. The CRM pipeline is 1.1 billion, and the value adjusted win rate has increased due to the win of the Bundeswehr contract, and also due to the fact that we have lost very little since the last quarter. So what we see is that we are still a bit optimistic on how quickly the customer will answer the tenders or that we are offering on, but there are very few competitors that are winning what we are bidding on. I can say for the OP5 tender that we are where we always knew that we are a first mover. We were the first to get the Luke. We were the first to do the type of operations we do, and we have a great position in the market. But we have always been looking at our back to understand where are the competitors, when are they coming. So on this specific tender, we only have one other competitor actually. Okay, so let me introduce you to Trond, our CFO. He will run you through the financials.
So I'll walk you through the financials. Knut Roar have mentioned it for you. We reached record high levels both for the quarter and for the year to date, with a 57% growth in the quarter and 84% growth year to date. So that's a strong growth. However, we haven't managed to make it profitable growth, and there are several reasons for that. Firstly, we were prepared for higher growth. We were scaled for higher growth, and we were willing and able to take a higher growth than we reached. And we are taking the consequences and focusing on a strategy in the future and doing organizational changes to adapt to the new future. Secondly, we had late start on our Babyloss projects. These are the larger systems that Knut Roar mentioned, the camcopters and the aerosonde, and they are crucial for our profits. We need to fly, and we didn't reach the desired levels before June in the second quarter, and that hits our profitability. Thereafter, we have had a challenging start on our fixed wing entrance. So it's in several dimensions. We have a lot of startup costs, training costs. We need to educate our crew. And secondly, the contract itself has been a challenge, and we had a loss-making contract for the second quarter. So fourthly, we had some costs, one-off costs related to M&A and uplisting, which in IFRS we need to have a P&L hit on. So that's amount to 0.5 million in the second quarter and 0.7 million for the year to date. To go to the balance sheet, we have available liquidity of 5.2 million, 1.2 in cash and 4 million in available credit lines. If we go to the balance sheet, we have a solid balance of 53% equity ratio after a successful private placement in June of 80 million and a subsequent offering concluded in July of 16 million NOK. On the asset side, we have built a strong platform. We have done the investment in the fleet that we see needed for now. We have also done the M&As we need for future organic growth. So we have used the cash to build that balance and the platform we need for our future growth. And now we focus on utilization on the fleet and taking the values out of the M&As to take cash out of the balance and put into the account.
Okay, so we'll go to the next slide. So we'll summarize this up. So yes, we are record high in revenue in Q2. We are delivering a very high growth, one of the highest growths in our industry. However, we were behind plan, so we had planned for a higher growth, and we did deliver. The Q2 cost base was prepared for that plan, and that is giving us the negative profitable effect that we are seeing. And the investment that we have done in the fixed wing capacity buildup, as we said when we won the contract, this is doubling the size of market when it comes to beyond visual line of sight operations, as fixed wings have a very important market as well. So the long-term value for us in doing that is very high, even though the short-term effect is negative. But we are learning fast and adapting accordingly. We have passed the full year 2021 revenue in mid-August, and we are expecting higher revenue and higher profitability in the next half, and that's based on the ongoing operations and the existing backlog that we have. We also are hoping for that we will close some new contracts, as we point out. Several large of these opportunities that we're hoping for, they could have a big impact on the growth rate and the corresponding profitability in the second half. So we talked about that before, but the effect will be very high. So it's going to be that's why we're highlighting it here. And the essence is that we have established the platform that we need for the future growth through the M&As that we have done and the fleet expansion. So going forward, our focus will be to get the most out of that from a sales and distribution point of view. So if you go to the outlook, we are maintaining our 200% growth outlook, but we are pointing out that it will require substantial awards within the defense and security sector. But we have available products to deliver on those substantial awards within 2022. We are also maintaining the 2025 growth target that we have put in there. And we are further exploring global partnerships. We strongly believe that this industry will continue to consolidate and will need to consolidate. And we're gonna take an active part of that and be active in having conversations with relevant future partners. And that's we see that there are many global partners that are talking together for time being for the same reason. Okay, so we will go to the Q&A session of the presentation. So
we haven't got any online as of yet. If there's anyone in the crowd that has any questions, then if you can repeat the questions after you're finished.
Yeah. Yes.
2 questions regarding equipment. Is there any progress on getting lease available lease on it, or do you have to pay for it?
Yeah. So
and yeah,
should I?
On if you look at the backlog addition in the second quarter, it was approximately 8 million, and you had revenues of about 5, meaning that excluding the German contract of 12, if I understand it correctly, it was quite limited with new manpower or flying orders in the quarter. Is that correct?
Yeah, let's do your first question first. So you're asking about the maturity of leasing equipment instead of our current finance structure, which is a combination of equity and bank debt. So we are in conversation with leasing companies, and we see leasing companies are seeing the maturity and seeing the business opportunity that could come out of leasing large drone systems. So we don't expect that to give us an effect now. But for future expansion, we definitely think that leasing companies can be used. Obviously, for the Brazil operation with Omni Helicopter International, their fleet is mainly based on leasing of helicopters. So we are also learning from the manned aviation on this finance structure, and we're also trying to educate the manned aviation leasing companies about our industry. So yes, we're working actively on bridging that. On the other question on the Q2 backlog, so when we are saying that we have our revenues has been postponed, it means that we will move that proportion of the backlog that we believe we should do in Q2 into Q3 as it's framework contract, so we don't reduce that. But there are, as you're also pointing out, there are limited contracts that have been won and added. So the Port of Antwerp is one that has been added. So some of our sales will happen within the quarter, so they is not reflected over one quarter from the others. But as I also pointed out, there are very few that has been lost either. So that's how it is. Okay. Any other questions from the room? So those of you that are in the room, you can also ask me questions afterwards. Do we have any digital questions as of yet? Okay. So for those of you that are listening in digitally, feel free to send us questions on ir@nordicunmanned.com, and we will try to get back to you as quickly as possible. And to you all, thank you for listening in. It's always great to give you an update on our business and how we are progressing. And those of you that have been following for a while, you see it's not a straight line. We are a growth company, and a lot of things is moving at the same time. But we are making great progress, see from a global perspective. So thank you all, and looking forward to presenting to you the third quarter in November. Thank you.